Nigeria's FX reserves just hit $41 billion, the highest in nearly 4 years. Is this the start of another confidence rebound for the Naira and investors? Good morning and welcome to another power-packed episode of Business Week. This week, Botswana bags a whopping $12 billion investment deal from Qatar's Al Mansour Holdings, a move set to turbocharge the region's capital flows, while South Africa is also shaking things up, flinging open its freight rail to private operators in a historic policy shift. And on the global front, OpenAI's Sam Altman warns we may be in an AI bubble as industry spending surges past safe zones. In the markets, Fed Chair Jerome Powell's Jackson Hole remarks kept investors on edge, while India's Tata Motors made a strategic re-entry into South Africa to face off with China's auto giants. Meanwhile, Kenya eyes a debt swap with China, and Nigeria's FX reserves have soared to their highest, strongest level since 2021. Also on the radar, Nigeria leads Africa's stablecoin boom with $22 billion in transactions, even as NNPC's July profits nosedive nearly 80%, and former oil chief Mele Kyari is back in the news with a court-ordered account freeze. Later in the show, Jane Egerton-Idehe, CEO of NIG Comsat, explores Nigeria's new space race. This and much more here on Business Week. Don't worry, if you missed all the great business stories during the week, I'm here to help you catch up as always. I'm Rolake Akinkunmi-Filani. Stay tuned. Okay, let's take a look at global energy commodities. We start, of course, with the oil, Brent crude and WTI. Week-on-week rises in both benchmarks. Brent was up by 2.25% week-on-week, while WTI crude was up by 0.6% week-on-week. We've seen tightening oil markets there and a small rise in global demand across board. Middle East tensions, of course, still weighing on market sentiment. Natural gas was down, actually. We've seen an expansion in storage capacity for natural gas. And of course, in the summer months, demand is not as tight, I guess, as the winter months. Natural gas was down by 7.48% week-on-week. RBOB gasoline was up by 3.85%. Let's scoot over to our equity markets, starting, of course, with the all-share index in Nigeria. It's quite a bit of a sweep of red there. You can see the all-share index was down week-on-week. The big losers here week-on-week were the industrials and the banking stocks. So we're seeing a week-on-week change of negative 2.5, and consumer goods and some other growth stocks held up relatively resiliently. The number of deals also slumped by almost 20%. The volume of shares traded dropped by 5.1%, but the value did increase, suggesting there were probably bigger trades by institutional investors on the exchange. Equity capitalization on the exchange ended the week just shy of 90 trillion naira. Let's take a look at African equities, I beg your pardon. The one to point out here is the Accra exchange, which was down by 0.89% week-on-week, but Nairobi, Joburg, and Casablanca held up relatively resiliently. Nairobi performance was largely due, according to our research, to the banking stocks there in the country. Let's take a look at Wall Street. Yes, interesting one here, because of course you've heard about the Fed Chair Jerome Powell's Jackson Hole remarks, which have left a lot of analysts and market watchers sort of a bit uncertain as to what is going to happen. But we are leaning towards a likely rate cut at the next monetary policy decision. The Dow Jones index did react positively to his Jackson Hole comments. In fact, the decision should be made actually today. And the index was up by 1.64%, but S&P and NASDAQ didn't react. They were not having it. But that was probably largely due to the sentiment in tech stocks across board there. We saw, of course, Sam Altman's remarks about OpenAI and the AI bubble, which he says is a possibility. That may have weighed down on sentiment, because we did see some stocks like Nvidia, Palantir, they did slump week-on-week in the past few days. Now, let's look at my top picks from around the world. First, it's good news for Botswana. The Southern African nation has just sealed a $12 billion deal with Qatar's Al Mansur Holdings, a large investment group. It sealed this $12 billion deal. A really great development for Botswana, because last year we saw a 3% contraction in the country's GDP on the back of a slump in diamond revenues, sentiment around diamond markets. Obviously, globally, and we saw a slump there. The government has, of course, been trying to increase its share in its major diamond joint venture with De Beers. But this investment deal had been months in the making, and Duma Boko, Botswana's president, said this is really going to help sort of deal and tackle with some of the economic challenges that the country is facing. Already this year, the IMF has been revising the country's growth forecast by 0.4%. So still expecting a contraction, but this $12 billion is going to go into areas like commodities, mining, some agriculture and energy, as well as infrastructure projects. And Qatar has really been pushing its agenda across Africa. It's also talking about deals in countries like the DRC and Gabon, with the government of Qatar doing a bit of a tour de force of some of these African nations to strike up some of these deals. And next up is South Africa, essentially what I think is privatizing access to its rail network. Now, that rail network, the freight rail network, has been largely dominated by the state-owned entity Transnet, but Transnet has suffered some capacity issues, and the government recently announced, Transport Minister announced, that it was now opening up the freight network route to around 11 companies that had been shortlisted. Now, the importance of this is that many mining companies who rely on the Transnet national company for transportation have had to dial back on their production due to Transnet's limited capacity. That capacity has slumped by around 40% from 2024. It's now only doing about 152 million tons in freight transportation on its rail route. Now, having these private companies come in is going to help increase the freight amount by almost 20 million tons annually. So it's good news for South Africa to open up this route to private companies. The government has been very careful to say it is not replacing Transnet, but actually complementing the work that Transnet is already doing. OpenAI Sam Altman has warned that we could be entering an AI bubble. Now, he's kind of drawing parallels with the 2002 dot-com bubble, 2-year bubble that we saw on global markets. And actually, in that 2-year bubble, the big thing is that the NASDAQ index in the US slumped by almost 80%. Tech stocks, which had made huge infrastructure investments, software investments on the back of the dot-com boom, saw a major rout in the market. And he's saying that this huge investment drive into AI may not be so substantial. Now, this is interesting coming from Sam Altman, because earlier this year, as we know, OpenAI raised $40 billion, the largest single investment deal in a tech startup. $40 billion this year on the back of a $300 billion valuation. Right? So I guess the question is, who is Sam Altman to be talking about an AI bubble when he's essentially staked his entire life savings on OpenAI? But we'll see. I mean, lots of companies are investing in OpenAI. We're seeing a gradual rise in OpenAI tech market capitalization. Interesting to see whether this new generation of OpenAI companies eventually outgrow the rising tech giants, the traditional tech giants on the big exchanges around the world. Trump's policies against renewable energy and clean energy have led to about $19 billion worth of clean energy projects being axed in the US market. Last year, around $800 million of clean energy projects were axed. But this year, under Trump, those policies that he's passed have led to a major shift in the market, in the clean energy market, with many wind and solar companies. Actually, according to bankruptcy data, around 11 companies in renewables in the US this year have had to declare bankruptcy. And a huge driver of that has actually been the reduction and curb in renewable energy subsidies, which was something that we saw, and tax incentives, which we saw rolled out under the Biden administration. So there's a huge onslaught against the renewable energy market here. But again, some have warned that this sort of one-track approach may not be sustainable, especially because with the advent of AI, there's a huge power and electricity requirement for many data centers that are powering AI in this day and age. Anyway, final thing, reports and research suggest that default risks in the global private credit market or private debt market, which is estimated to be about $1.7 trillion in value, is rising. Default risk is rising in global private debt market. That's interesting because you would have seen a recent announcement of TLG around a private debt fund for the African market. But essentially, the concerns around here are that the private debt market lacks a great deal of transparency around the terms of loans or the actual borrowers of these loans. So there's a need to watch how this market evolves, but it's a growing space for huge investments in areas like infrastructure and other critical sectors. That's it for my top picks from around the world. Now let's take you to some of our other top stories from around the world. Federal Reserve Chair Jerome Powell on Friday gave a tepid indication of possible interest rate cuts ahead, as he noted a high level of uncertainty that is making the job difficult for monetary policy makers. In his much anticipated speech at the Fed's annual conclave in Jackson Hole, Wyoming, the central bank leader in prepared remarks cited sweeping changes in tax, trade, and immigration policies. The result is that the balance of risks appears to be shifting between the Fed's twin goals of full employment and stable prices. The European Central Bank officials are increasingly convinced they can keep interest rates unchanged in September, according to people familiar with the matter who don't see the trade deal between Brussels and Washington causing major economic concerns. Since rates were left at 2% last month, growth and inflation have developed largely in line with the ECB's June outlook, according to sources within both institutions who asked not to be identified in discussing these confidential debates. That foresaw price pressures dipping in 2026 before hitting the 2% goal again in 2027. India's Tata Motors returned to South Africa's passenger vehicle market after a 6-year absence, launching 3 ranges of SUVs and an entry-level compact hatchback to take on Chinese competitors. Growing demand for budget-friendly cars is luring global automakers to offer consumers more options in a shift that spotlights rising reliance on low-cost imports from India and China, but puts a question mark on future domestic production. Its return pits Tata against a rising tide of Chinese automakers such as Chery Group, BYD, Beijing Automotive, and GWM, which have offered competitively priced vehicles with different powertrains in recent years. Kenya is in talks with China to convert dollar-denominated debt the East African nation owes its biggest bilateral lender to yuan and extend the repayment period, according to Treasury Secretary John Mbandi. The negotiations are aimed at helping to reduce the $1 billion Kenya spends annually on servicing its debt to China and to create more wiggle room in its budget, he said in an interview in the capital, Nairobi, on Wednesday. The discussions are expected to conclude soon without providing a more specific time frame. That was according to Mbandi. Now, over to West Africa. Ivory Coast cocoa grinds dropped 31.2% year-on-year in July to 39,000 metric tons. Data from Exporters Association GPEX showed on Monday, with grinders citing poor bean quality and low volumes of the mid-crop. The total grind, part of the process of transforming cocoa beans into chocolate from the start of the 2024-2025 season in October until the end of July, stood at 515,000 tons of beans, down 4% from the same period last year. The Nigerian National Petroleum Company Limited, NNPCL, has posted a steep 79.6% drop in profit after tax, sliding to 185 billion naira in July 2025 from 905 billion naira in June, its latest monthly financial and operational report shows. The state-owned firm said the slump was driven largely by movements in cost of sales and income tax adjustments, which offset steady revenues and stable production. Group-wide revenue fell marginally to 4.41 trillion naira in July, compared with 4.57 trillion a month earlier. Nigeria has emerged as Africa's biggest stable coin market, with nearly $22 billion worth of transactions recorded between July 2023 and June 2024. This is according to a new report by Yellow Card, Africa's leading stablecoin payments infrastructure provider. The report, titled Stablecoin Adoption in Emerging Markets, which was released on Tuesday, highlights the transformative role of stablecoins across Africa, where they now account for 43% of all crypto transaction volumes in sub-Saharan Africa. Justice Emeka Inwite of a federal high court in Abuja yesterday ordered a temporary freezing of 4 bank accounts of the immediate past group managing director of Nigerian National Petroleum Company Limited, Mele Kyari. The freezing of the 4 accounts in Jaiz Bank was a sequel to ongoing fraud investigations by the EFCC. The order to freeze the said accounts was issued in a ruling on an application argued by the lawyer who represented the anti-graft agency. Nigeria's foreign exchange reserves have climbed to $41 billion as of August 19, 2025, the highest level in 44 months, according to figures published by the Central Bank of Nigeria. The current level is the strongest since December 2021, marking a sharp rebound after months of depletion and volatility driven by external debt repayments. The latest increase highlights improved foreign exchange inflows and strengthens the CBN's capacity to stabilize the naira, manage liquidity, and defend against speculative pressure. Bismarck Rwane, MD/CEO of Financial Derivatives Company Limited, spoke with my colleague Georgina Ndukwe Ezeanyika on Arise Exchange yesterday and gave his thoughts on the rise in Nigeria's FX reserves.
Well, there are many factors that go into determining what the level of reserves are. But first of all, let our viewers know the difference between gross reserves and net reserves. Gross reserves includes obligations that have not been met and so on. When you compare reserves of countries, you actually look at net reserves. So Nigeria's gross reserves have actually increased sharply from a level of $32.91 billion in August last year to over $41 billion, up for about $7 billion. I think that has to be clearly understood. Secondly, the level of external debt that Nigeria had actually increased also from 42.5 to $46 billion. So whilst the reserves increased by $7 billion, the debt also increased by $4 billion. So net, Nigeria is in a better place by $3 billion. And the debt that we acquired, the $2 billion diaspora bonds, $2 billion general bonds that were issued, Euro bonds that were issued. So let us break it down and try to understand why your reserves will increase if what you've exported is more than what you imported. And therefore, and your payments, you can see those slides showing very clearly. You can see very clearly there that our external reserves in August, gross external reserves in August last year were 36. That's what you see in the left-hand corner. And it has gone all the way to 41.05, a remarkable achievement by the central bank. You will see that by August last year, the currency, the stability of the currency, the convergence of the currency, the gap between the parallel market and the official market had closed dramatically. And so when you look at the next slide, you will see that Nigeria posted a balance of trade surplus, more or less, of $6.83 billion in 2024, reversing the deficits of 2023 and 2022. The goods that we exported increased by 63% to $13.17 billion, driven by higher gas, and non-oil exports went up by 36%, and gas exports also went up. But on the other side of it, you'll find that our imports, what we imported, fell by 16%. So why are our imports falling? Our imports are falling because the naira is more expensive And that is the benefit of the convergence of rates and removal of the rent in the exchange rate. What Nigeria is facing today, Nigeria is witnessing what we call a managed floating exchange rate, being efficiently and effectively managed by the central bank. That we must understand. Foreign portfolio investments came in and went up by $13 billion, and that has helped to support the currency. And you see that clearly. You'll find that, you find that has kept the currency in play. $13 billion of this. But the problem with foreign portfolio investments is it is hot money and it can go away. What happened in Southeast Asia in the 1990s happened during the hot money era of 2008 and 2009 has put us on notice that we cannot depend on hot money. What you read is the foreign direct investments. But in any case, the foreign portfolio investors are taking advantage of, one, our high interest rates and our stable currency. So that's what we call the carry trade. They are benefiting from it, and it's not a bad thing for now. At least it has brought about stability in the exchange rate. And one thing you must note is that when the exchange rate is stable and appreciating, it helps to actually moderate inflationary pressures. And when inflation maintaining a downward trend, which you can see, you will see that the country begins to become attractive to investors, both portfolio and foreign direct investors, and local investors for that matter.